stock market again, the government is coming Bitcoin bubble? North Korea had another very successful missile test. This time it went 10 times higher than the International Space Station. Secretary of Defense James Mattis says this proves North Korean ballistic missiles can now reach Washington or anywhere else in the world. President Trump was quoted as saying, "We'll take care of it," but didn't explain what he meant. Trump also said of the North Korean missile launch, "It is a situation that we will handle." UN Ambassador Nikki Haley was blunter and said, "If war comes, make no mistake, the North Korean regime will be utterly destroyed." At the very least, more sanctions are coming for North Korea. The stock market set new record all-time highs again. This time it was on the news that Senator John McCain said he was going to vote for the GOP tax cut package. You remember during the partial repeal of Obamacare, McCain was the vote that killed the deal. Meanwhile, all is not a rosy picture, and many are warning that valuations are high and the yield curve is signaling recession. One of those people doing the warning was none other than outgoing Fed head Janet Yellen. Whether you are a fan of Bitcoin or not, one thing is for sure. It's been on one wild ride this year. Bitcoin shot over $10,000 a unit all the way up past $11,000. Then it fell 20%, but it's still way up for the year. Now, Bitcoin has gotten the attention of the White House, Homeland Security and the Fed. The Federal Reserve is now saying that Bitcoin could pose financial stability issues. Could the US government try to make Bitcoin illegal? The government is coming for your Bitcoin. The same day Bitcoin cracked its all-time high above $11,000, the government dealt its first blow to the crypto world. On Wednesday, a federal judge in San Francisco ordered the popular Bitcoin exchange, Coinbase, to provide the IRS with information on over 14,000 account holders. The taxman noticed that only 800-900 people reported gains related to Bitcoin in each of the years between 2013 to 2015. It seemed unusual given Bitcoin's meteoric rise. So the IRS went for its pound of flesh. Initially, the government wanted complete data on every Coinbase user that transacted between 2013 and 2015. The exchange's website says it has 13 million users, more than the number of Schwab brokerage accounts. But Coinbase pushed back, and the government agreed to only take limited data, including name, date of birth, address, tax ID number, transaction statements and account logs for accounts that have bought, sold, sent or received at least $20,000 worth of Bitcoin in a given year. Don't say I didn't warn you about Coinbase. I told Sovereign Man, confidential readers last month, if you're tempted to purchase Bitcoin from the popular Coinbase exchange, don't bother. They've sold out the regulators. The IRS is calling this a partial win. But you can be sure, there will be a public beheading. This is something governments almost always do. They'll find a prominent Bitcoin person, someone that's polarizing to the public, like Pharma Bro Martin Shkreli. It will be a very public trial. And they'll throw his ass in the slammer. Governments always do this because they want to scare people. Kim.com is the perfect example. Kim founded the popular file-sharing site Make Upload. The government wanted to stop illegal downloads, so they raided his guy's house in New Zealand for violating US law. The government also does this for taxes. Everything, really. Look at Wesley Snipes. The IRS accused him of felony tax evasion. He spent 3 years in jail. They had to take a celebrity and throw him in jail to scare everyone else. Back to Bitcoin. Now that it's at all-time highs, the government wants its piece. I read the 400-plus pages of the proposed tax code. How many lines in there do you think deal with cryptocurrency? 0. How many lines deal with e-commerce? 0. The government had every opportunity to set the rules for the 21st century. And they failed miserably. So the rules remain as clear as mud. Instead of trying to make it clear, their tactic is intimidation, force and coercion. This is just the beginning. There will be more. And my advice is don't be one of those guys. Every transaction that you make in Bitcoin is potentially a taxable event. Let's say you bought Bitcoin for $1,000, and after it went to $10,000 you buy a business class trip to Australia for $10K. When you pay the airline with 1 Bitcoin, you've just triggered a taxable event. The IRS would say that you essentially sold your Bitcoin, have a $9K gain, and used those proceeds to buy the ticket. Which means you owe the IRS capital gains tax on $9K, which is 20% plus the Obamacare surcharge. So, don't be that guy. If you've been doing this, trust me, you don't want the IRS find out. You'd rather come forward yourself and disclose it and pay taxes, rather than be the next Martin Shkreli. Reason for Bitcoin sudden plunge revealed. UK plans regulatory crackdown on cryptocurrencies. Just after 4:30 p.m. ET we showed that Bitcoin, and the entire crypto space, tumbled, with Bitcoin plunging from session highs just under $12,000 to a low of $10,600 on what appeared at first sight to be no news. However, in retrospect this appears to not have been the case, and as the Telegraph reported just around the time of the big drop, UK ministers are launching a crackdown on the virtual currency Bitcoin amid growing concern it is being used to launder money and dodge tax. Taking a page out of the Chinese playbook, the UK Treasury has announced plans to regulate the Bitcoin that will force traders in so-called cryptocurrencies to disclose their identities and report suspicious activity. According to the Telegraph, while, until now, anybody buying and selling Bitcoins and other digital currencies have been able to do so anonymously, making it attractive to criminals and tax avoiders. But the Treasury has now said it intends to begin regulating the virtual currency, which has a total value of £145 billion, to bring it in line with rules on anti-money laundering and counter-terrorism financial legislation. John Mann, a member of the Treasury Select Committee, said he expected to hold an inquiry into the need for better regulation of Bitcoin and other alternative currencies in the new year. He said, "These new forms of exchange are expanding rapidly and we've got to make sure we don't get left behind. That's particularly important in terms of money laundering, terrorism or pure theft." I'm not convinced that the regulatory authorities are keeping up to speed. I would be surprised if the committee doesn't have an inquiry next year. It would be timely to have a proper look at what this means. It may be that we want speed up our use of these kinds of things in this country, but that makes it all the more important that we don't have a regulatory lag. The proposed changes come amid increasing fears that Bitcoin is being used by gangs to launder the proceeds of crime, while also attracting currency speculators, with the value of the coin soaring in the past 12 months. In other words, the same reason why the IRS is cracking down on Coinbase clients in the US is also why UK and European regulators are joining China in cracking down on capital flight. While such legislation by the UK alone would hardly have a major impact on crypto pricing, after all the UK is a very minor player in a market that is dominated by Korea and Japan as proxies for China, and to a growing extent, the US, the new rules will also be applied across the European Union, and are expected to come into force by the end of the year or early in 2018, the minister in charge has said. As for the EU, the new regulations are expected to be included in amendments to current European Union-wide legislation designed to prevent money laundering and terrorism financing. In terms of actual changes, the Telegraph notes that cryptocurrency exchange platforms and wallet providers will be obliged to report suspicious transactions and carry out due diligence on customers. That means the identities of Bitcoin users will no longer remain anonymous. Stephen Barclay, the economic secretary to the Treasury, revealed plans to change the legislation in a written parliamentary answer. Mr. Barclay said, "The UK government is currently negotiating amendments to the Anti-Money Laundering Directive that will bring virtual currency exchange platforms and custodian wallet providers into anti-money laundering and counter-terrorist financing regulation, which will result in these firms' activities being overseen by national competent authorities for these areas. We expect these negotiations to conclude at EU level in late 2017/early 2018. The Treasury spokesman said last night, "We intend to update regulation to bring virtual currency exchange platforms into anti-money laundering and counter-terrorist financing regulation." That said, neither the UK nor the EU will be the first to demand a crackdown on Bitcoin anonymity. In fact, since China's infamous block of cryptocurrency exchanges in September, Bitcoin has risen nearly fourfold, seemingly undaunted by anything that regulators, central banks and sovereigns have thrown at it. It remains to be seen if this time will be any different, although after sliding to a Sunday session low of $10,600, Bitcoin has already cut its losses in half, and was trading at $11,280 at last check. Same day Bitcoin cracked its all-time high above $11,000, the government dealt its first blow to the crypto world. On Wednesday, a federal judge in San Francisco ordered the popular Bitcoin exchange, Coinbase, to provide the IRS with information on over 14,000 account holders. The taxman noticed that only 800-900 people reported gains related to Bitcoin in each of the years between 2013 to 2015. It seemed unusual given Bitcoin's meteoric rise. So the IRS went for its pound of flesh. Initially, the government wanted complete data on every Coinbase user that transacted between 2013 and 2015. Stock market again, the government is coming Bitcoin bubble? North Korea had another very successful missile test. This time it went 10 times higher than the International Space Station. Secretary of Defense James Mattis says this proves North Korean ballistic missiles can now reach Washington or anywhere else in the world. President Trump was quoted as saying, "We'll take care of it," but didn't explain what he meant. Trump also said of the North Korean missile launch, "It is a situation that we will handle." UN Ambassador Nikki Haley was blunter and said, "If war comes, make no mistake, the North Korean regime will be utterly destroyed." At the very least, more sanctions are coming for North Korea. The stock market set new record all-time highs again. This time it was on the news that Senator John McCain said he was going to vote for the GOP tax cut package. You remember during the partial repeal of Obamacare, McCain was the vote that killed the deal. Meanwhile, all is not a rosy picture, and many are warning that valuations are high and the yield curve is signaling recession. One of those people doing the warning was none other than outgoing Fed head Janet Yellen. Whether you are a fan of Bitcoin or not, one thing is for sure. It's been on one wild ride this year. Bitcoin shot over $10,000 a unit all the way up past $11,000. Then it fell 20%, but it's still way up for the year. Now, Bitcoin has gotten the attention of the White House, Homeland Security and the Fed. The Federal Reserve is now saying that Bitcoin could pose financial stability issues. Could the US government try to make Bitcoin illegal? The government is coming for your Bitcoin. The exchange's website says it has 13 million users, more than the number of Schwab brokerage accounts. But Coinbase pushed back, and the government agreed to only take limited data including name, date of birth, address, tax ID number, transaction statements and account logs for accounts that have bought, sold, sent or received at least $20,000 worth of Bitcoin in a given year. Don't say I didn't warn you about Coinbase. I told Sovereign Man, confidential readers last month, if you're tempted to purchase Bitcoin from the popular Coinbase exchange, don't bother. They've sold out to regulators. The IRS is calling